Hello everyone, welcome to Insurance Business TV and our Cyber Insurance Power Panel Q3 edition. Yes, once again, we've brought together some of the biggest names in the sector to look at the latest market developments and more. On this edition, we have Jacob Ingerslev. He is SVP of Cyber and Tech Underwriting at Tokio Marine HCC Cyber and Professional Lines Group. Nadia Hoyt, National Practice Cyber Leader, Executive and Professional Risk Solutions at USI Insurance Services. Matt Kimmel, Chief Broking Officer, Cyber Solutions at Aon. And John Farley, Managing Director of the Cyber Practice at Gallagher. So let's start with a little bit of a scene setter for each of our panelists. I want to know quite simply, how do you assess the cyber insurance market conditions currently, and where do the opportunities exist? John, I'll start with you.
Well, thanks, Paul. Great to be here. So what we're seeing is really a continuing softening market that we've seen over the last couple of years. So lots of capacity, lots of players offering cyber insurance and higher limits than they were in years past. So in that competitive environment, we're seeing rates that are flat to falling at the cyber renewal.
Okay, so a softening market then, Nadia. That must be an opportunity-driven one as well then.
Certainly, very much so. It really is an opportunity-driven market right now, which can confuse the messaging. So it really is incumbent around brokers to really structure what are the needs and prioritize what are the needs of the customer to ensure that insurance and cyber insurance, that is wrapping around the right risks. So yes, overwhelming amount of capacity has also created a little bit of friction when it comes to that, but it is for sure an opportunity-driven market.
Right, opportunities galore. So we can describe it perhaps as a buyer's market as well, Jacob?
Yeah, still a buyer's market. And I think the overarching opportunity is micro and small business, both for insurers and brokers. That's the least penetrated area of cyber insurance still, while at the Fortune 1000 end, most people have made up their mind about cyber insurance at this point, bought it or decided not to buy it. I do think there's some stabilization on the way. We see it in the excess market. That was the first to get impacted by soft market conditions a couple of years ago. And that's inching closer to flat now. So we'll have to see. I felt the same way a year ago. Then we got into Q4 and things changed. But, still waiting.
I like that comment that people have perhaps made their mind up one way or the other already. Matt, are you seeing perhaps any new limit being purchased?
We are, and I think this is the time where clients really need to figure out and understand how to optimize their program, really take a step back internally, benchmark themselves versus their peers, but also take a look at some financial models to their potential exposure. We're seeing about 20% of our client base purchase additional limits. That being said, we also are seeing some of our clients proactively take on higher retentions to redeploy some of those higher premium spend layers down at the lower part of the program and redeploy them for larger blocks of capacity at the top of the tower to really make sure that they're insuring for the catastrophic risks out there. Also, too, what we're seeing is there is some pockets, I would say, of firming and stabilizing that we're hearing in the marketplace from some of the more legacy cyber insurers with the longer tail books. So making sure you're partnering with the right long-term stable insurer in this space instead of potentially going with always the lower cost alternative that may not be there when you need them for a claim or may not be there in the long term. So it is definitely an interesting buyer's market right now, but there are some potential roadblocks and hurdles ahead if clients are not taking a long-term strategic approach to buying their programs.
Okay, so that's sort of a scene setter for the marketplace. And of course, when we've been talking about cyber over the years, ransomware has very much been at the forefront when we've been talking about the risks involved. But now, of course, some regulators are considering banning ransomware payments in some countries. So how would you assess its risk level, and do you expect the issue to be exacerbated or to fall in severity, Nadia?
I don't think it'll fall in severity only because ransomware is not just one thing. The impacts are definitely multiple. And so ransomware payments are a part of it. Here in the United States, there are states that looked to ban payments, and it didn't have the impact or the effect of lessening the severity or even the likelihood of a ransomware incident to have. There is a ransomware ecosystem, a ransomware economy that threat actors buy into, and that's not going away anytime soon. Controls and consistency of those controls are definitely the answer when it comes to those policyholders.
Yeah, I'm interested as well. Jacob, do we have any good data on this?
Yeah, I mean, the question here is what would happen in the event of a ransomware ban, and I think you'd need a universal one for it to work at all, and I just don't think it's going to get there ever. But what we can look at as a benchmark is 5, 6 years ago, almost everyone was paying the extortion demand. It was 85% or higher. Today, we're down to 25 to 30%. And what we've seen is just costs shifting around. Less extortion money is paid, but more business income loss with the double extortion tactic, which is data exfiltration in addition to encryption. We're seeing much more litigation. So actually, that's what's been pushing up severity over a handful of years. So I'd expect the same thing to happen if there was a ban on the extortion payment. You're still left with the other costs.
Yeah, some interesting statistics there. Matt, does that reflect what you're seeing in terms of what insurers are doing here?
Actually, we've actually kind of seen the actual increase in the decrease in severity. So we actually saw the payment amount decline by about 77% when we compare 2023 data to 2024 data. Also, too, the average demand amount has slightly decreased. So what that tells us is that obviously the threat actors are still attacking while the frequency is still up. The demand and the payment are less because insurers are able to recover quickly and insurers are better prepared to recover. To Nadia's point, they're using the controls, they're really investing in the technology, and that preparedness of not if we're going to be attacked, but when we're going to be attacked is starting to really pay off in the marketplace. And to follow my fellow panel colleagues, right, regulation can only go so far, but it really should be focused on your internal organizations and the controls and the procedures you continue to invest in to prepare your organization for these types of events.
All right, John, let's get your perspective as well. What do you think of the concept of a ban?
Yeah, it's interesting. You really have to look at it from an industry perspective. So if I am in the healthcare sector and I'm a hospital and I can't pay a ransom, but I've got a number of patients that are waiting for critical care, I can't get access to my data many times. It may be encrypted. And so then what does that mean? Right? What does that mean to physical safety for people? Right. So that's a real life impact. And then you can even look at critical infrastructure, right, and power grids and so forth. If there's a ransom situation and you can't pay it, you're going to have downtime. The lights are going to be out for a longer amount of time. And that could have real world impacts to people. So in the short term, we've got to think about what a ban really means. And so I think it really merits a lot more discussion.
Yeah, well, of course, no ban just yet. So I'd just love to find out from each of you, what are the leading causes of ransomware currently? And indeed, what form are you seeing ransomware take most commonly? Jacob, what are you seeing?
Nothing new like in the last quarter, but sort of increasingly in the past 2 years. We still have the same, the phishing, the remote code execution vulnerabilities, and remote desktop protocol. But the leading cause for the past 18, 24 months has been SSL VPN compromise. SSL VPN is a type of VPN where you log in through a web page. And unfortunately, those are very easy to find and very easy to brute force if you don't have MFA or account lockout. So, if you have SSL VPN, change it to a different type of VPN. That's my best advice. And then after that, of course, you got to have MFA on all users. That's what we're seeing.
Okay, I'm wondering if that's where I get my foreign Netflix from. I'm just joking, Netflix, I do pay if you're watching. Matt, let's get your thoughts on ransomware. Where are you seeing it most commonly?
So similar to Jacob, the top 10 we're seeing is the exploitation of public-facing applications. So those unsecured public-facing applications, understanding what's in your environment, what's exposed to the public, and making sure those are secured links. Also, the external remote services logins, as Jacob was mentioning, is another large concern. One that wasn't mentioned, though, yet, and one that's continuing to increase is phishing. I think a lot of that is driven by AI. And so they're really amplifying their attacks. They're able to offer more phishing campaigns, but they're also becoming more sophisticated and more tailored to organizations. So definitely phishing is one we're starting to see come up on the rise again and drive a lot of the potential ransomware events that we're seeing.
Okay, so phishing on the rise. And John, is this about encrypting data or something different?
Yeah, we're seeing an evolving method of the threat actor. In the past, we always had cases where, they were encrypting data. They were locking it down and saying, pay me and I'll give you the decryption key. Now we're seeing less encryption and more just exfiltration with the threat that they're going to expose the data. if you don't pay. So no, not as much encryption, more exfiltration, threat to expose, and then people, if they do pay, are paying for suppression of data.
And Nadia, let's get your perspective as well, because you have a different focus on the mid-market, of course.
So from a middle market perspective, really our data really leans into some of what Matt said in terms of just phishing. Phishing and the renewed sort of focused approach around it is certainly something that has been effective. And it really doubles down once they're in the actual environment, how they're able to mishandle credentials. And it certainly creates the ecosystem for more and more access by threat actors into these environments. So that's definitely something that we're seeing. It is not something that has gone away. It is a simple economic way that threat actors are able to get into these environments very easily, and it continues to work.
Ransomware continues to work, and of course supply chain exposures have definitely started to work as well. So what proactive underwriting strategies, policy adjustments could we make to manage those exposures, Matt?
As a broker, right, we don't like to see any restrictions really on our coverages there, but I'm sure Jacob will contradict that a little bit. But that being said, we know it is a difficult risk to understand and to underwrite to. So I think having a very good understanding of who's in that supply chain, what you're actually intending to cover. There's some variances in the policy language when it comes to system failure, security failure, or even what is considered a covered vendor. So as an insured, I would have a good understanding of, number one, what is covered in your policy, and number two, what you intend to cover, and then work with your broker and work with your underwriters to come up with a solution that works for you. Maybe that is taking on a higher retention. Maybe that is sublimiting coverage, or maybe that is paying a higher premium and getting that full supply chain covered. So it's really kind of a tailored covered, and it's not straightforward across the marketplace.
Yeah, I'm wondering, John, is it even possible to get the correct coverage for those type of losses?
Well, it's interesting. We're seeing policies that have some limitations. There's exclusions around non-IT providers versus IT providers. What I try to do is push for coverage to be broad enough to cover all providers. We're also seeing exclusions around contract requirements. So you know that in a supply chain, it may not be your vendor that's attacked. It could be your vendor's vendor, right? So if they get attacked and my insurer does not have a contractual relationship with them, there may well be an exclusion there because my client may not have a direct contract with that vendor way down the supply chain. So there's a few coverage pitfalls around supply chain attacks that we need to be laser focused on as brokers.
Yeah, so Nadia, do brokers need to step up a little bit? Do they need to challenge the coverage?
Yeah, they do. I think they have to challenge the underlying basis of the coverage. Being able to have a concerted conversation with your customer to really sort of understand when it comes to business interruption loss, does a waiting period make sense? Do the math with them. Scope out what a potential loss would be to determine whether or not that works or a qualifying retention works. So being able to be in the driver's seat, given how soft the environment is, to push the elements of coverage is where brokers definitely need to lead from. Making sure they have a very good understanding of what their client's business income loss would be, what a loss scenario would be, and making sure that that understanding overrides or at least informs how the insurance is structured. Brokers definitely are being challenged with that.
Well, you've heard all the broker perspectives now, Jacob. Let's get your opinion.
Yeah, tough crowd, unfortunately. I think I'm going to have to say what's best for insurers to do here is, at the moment, given market conditions, figure out what you are exposed to. So try to map your insured's vendors and determine where you might have concentrations. What we've seen in the past couple of years are industry specific widespread events that have caused business interruption. And what you can do there is determine what's your concentration in those industries. For example, where do you have your highest policy counts, then look at which vendors have the biggest market shares and try to do the math behind that. Use the CAT model severity assumptions to apply to those scenarios. So we've learned quite a bit in the past couple of years. And there's also the opportunity to monitor some of those vendors as we do with our own policyholders to see if there are any red flags. So that's what we're trying to do at the moment.
I just want to go back, if I can, to something that was mentioned earlier in the conversation. I think it was by Matt when he talked about phishing volumes surging. They have actually gone up by 17% in recent months, with 82.6% of phishing emails now apparently using AI techniques. So what loss control requirements should be emphasized here in structuring policies that safely support these BEC, those business email compromise, and indeed those AI-enhanced phishing exposures? John, any thoughts on this?
Yeah, so my mind goes right to deepfake technology and some of the new techniques that hackers are using to carry out business email compromise and different types of social engineering schemes. So what I'm excited about is that we have new technology out there that can help organizations determine whether or not something is a deepfake video or audio. They use technology to pick out pixel anomalies that can basically tell you, watch out, this looks like a deepfake video. And so it can alert an organization in real time during the video call, which is fantastic. And then separately, there's different procedural strategies where you can implement, sort of a zero trust policy around media, right? So by default, you're not trusting the audio or the video, and you have some procedure in place to verify that voicemail or that video.
Just like to assure everybody watching, this is not a deep fake. Nadia, over to you. I mean, I guess we've got to have the right governance in place here as well, haven't we?
Yes, I do think so. I think being able to adhere to something. So, for middle market organizations, they may not have governance departments, but there are frameworks that exist when it comes to AI. MITRE has one that is publicly available. We also have one with respect to NIST. They're not perfect, but they are a starting point. And making sure that you are starting to prioritize having a governance and some form of framework when it comes to AI anything, being able to scope out AI in all ways, shapes, or forms. Whether you have employees who are utilizing free tools versus paid tools, and making sure that there is an understanding of what sorts of controls, privacy controls, need to be in place to just ensure that you are in an environment that can be managed and can be controlled. It's not going to be perfect, but we all have to level up and ensure that we are at least adhering to something. Or else we will be at the behest of any threat actor when it comes to phishing schemes.
Yeah, a strong statement, a worrying statement, perhaps. Jacob, any particular areas where you've seen phishing rise?
We're not seeing particular evidence, but obviously phishing is sort of the leading tactic when it comes to wire transfer fraud. And it would be logical to assume threat actors are doing the same things we are, which is trying to be more efficient with AI and write better emails. And I'd be surprised if this doesn't drive sort of an increase in both frequency and severity in the wire transfer fraud exposure. And we'll have to keep monitoring it. Hopefully the defenses, some of which John talks about, are equally good. So it just becomes the usual arms race between threat actors and organizations trying to defend against them.
Yeah, watch out for those emails from those Nigerian princes once again. They're getting more sophisticated. Matt, let's bring you back in as well. I saw you nodding along when Nadia was talking about the governance side of things.
Yeah, and we think that the cultural standpoint really plays a large factor in this. So it should start at the board level down. There should be the appropriate amount of investment to the whole organization. Directors and the C-suite should be as held accountable as the line level employee that is supposed to take the training. So everybody should be held to the same standards, and there should be a recourse if people are not completing the trainings appropriately as well. So we look forward to working with organizations. As Nadia mentioned, there is frameworks that people can comply with, but there's also internal investment that can be made to make sure that your organization is protected from a people standpoint, as they are the most vulnerable when it comes to phishing attacks.
Excellent stuff. And I'm going to wrap up this call, if I can, the way we often do, which is by whipping around all of you and just getting a quick tip for navigating the cyber insurance market for the remainder of the year. Nadia, let's get a tip from you.
Oh, goodness, I'm going to be controversial. There aren't any tips. I do think that what brokers need to have is a shifting book of strategies. This market has always been markets that have mini cycles when it comes to sort of loss and certainly rates. So I do think that brokers need to have a rule book that sort of deals with the cycles, because the cycles will always have. So I don't think tips. I think you need to understand that yesterday's exposures are yesterday's exposures. I think we need to be constantly vigilant in making sure that we are doing what we can to help our clients prioritize what they need to be focused in on from a tech stack perspective and how they should be viewing risk. I also think that brokers need to be malleable in understanding that the threat landscape is constantly dynamic, and we need to make sure that we have a full appreciation of risk when we engage with insurers to ensure that we are putting forth the right levels of risk transfer.
Okay, well, I was going to ask for a tip, Jacob, but instead I'm going to ask for something from your book of strategies, please.
Yeah, obviously, slightly different angle to my fellow panelists here. But as an insurer, this is probably the most crucial and challenging time to navigate the market conditions. Hopefully we're at the tail end of a soft market. This is where you gotta stay disciplined, and you don't want to be the last to find out that rates started going up. So that's sort of our philosophy is stay disciplined right now.
Good one. Matt, a tip or a strategy from you?
Yes, I would just add, I would say, take advantage of the soft market conditions, but build the program for long-term sustainability, making sure the insurers you put on your programs are going to be around for the next few years, making sure that the coverage you're able to obtain in the soft market is sustainable for future years and future renewals, and really understand what those coverage needs of your clients are. So it's really working not just at the next renewal coming up, but the next few renewals coming up when you're building out these cyber programs, and having the ability to adjust those programs as needed if market conditions do somewhat shift over the next few renewal cycles.
All right. And finally, John, any good tips from yourself?
Yeah, sure. I think I'm going to take a perspective of new technology, right? And just being mindful that like things like AI platforms, we're running to adopt these things. They're evolving at really rapid paces, but we're not always looking at the potential losses. And those losses around AI can really take up quickly. And I think we've got to be careful in embracing technology before truly understanding the risks. So let's try to take a more proactive risk management standpoint. Let's not wait for the losses to happen because we've just embraced this new technology. Let's try to take steps now to prevent those losses from happening so we don't run into a hard market, overnight, right? So that's what my tip would be.
Great thoughts across the board. Indeed, huge thanks to all of our panelists. Of course, with cyber, things are constantly evolving and no doubt things will change again. So make sure you join us in Q4. And until then, keep it right here on Insurance Business TV.